On the portfolio. So last week the stock market did some good stuff. Like it closed out on a super high. I mean, look, it's made up. I think we dropped when initially the market crashed or went all the way to its all-time low, or not all-time low, but dropped from its all-time high. It dropped all the way to 30%. But then since then, the market has made a ridiculous recovery. I think it's recovered about 20% of its initial losses that it had. For me, that means that my stuff is starting to go back into the green as far as this portfolio is concerned. I'll go into my M1 portfolio here in a second and talk about that. But my Robinhood portfolio has come back into the green. Now, are we out of the bear market? We don't really know. And that's the thing about the stock market that doesn't make sense. And that's why you can't really look at the stock market as like to tell if the economy is doing well or not, because the stock market doesn't necessarily follow the trend of the economy. I mean, if you think about it, more businesses are being closed. We're having higher and higher unemployment numbers. I think the unemployment filing as of Thursday last week was about 16 million people, which we'll talk about that more on Thursday's podcast. So that's why you can't look at the stock market and be like, oh, the stock market is doing well, so therefore the economy is doing well. No, those two things do not correlate. So we'll talk about more about like how the stock market and all of that stuff looks at the economy and how the economy looks at that and why some news doesn't affect it and some news affects it. But we'll do that on Thursday. Today, though, we'll talk about the different types of investments that you can make on the stock market. But before we get into that, I just wanted to update y'all on the portfolio. And basically, the only update I have on the portfolio is something that I'm going to start doing to make it more of a consistent effort to ensure that I am always doing some kind of investment in the market. So one of the things that I'm doing is I am selling out of Gamer. I'm going to sell out of this Gamer share just because this one was bought basically out of like frivolous spending, not necessarily frivolous spending, but it was like, oh, I want to invest into the Gamer fund, and this is an ETF. I want to invest into the gaming industry, and I didn't really do a good amount of research, and I just bought it because there's not a whole lot of like available ETFs in the gaming industry. So it's just better off for me to buy a single stock for that one rather than buying like a Gamer ETF. And this ETF was just not that great, in all honesty. When I looked at it again, and as I continue to understand stuff, understanding the expense ratio of it, which is ridiculously high. I think the expense ratio of this one is about 0.7, which is pretty high for a ETF. And that's something that we'll talk about today on like expense ratios and stuff like that. But it was just kind of high, and so I'm just thinking I'm gonna sell out of it. I'm gonna sell out of that ETF, and what I'm gonna do is I'm going to, as we talked about before, is I'm going to buy Comcast because I want to own Comcast because I believe it is a safe stock to own. As well as one thing that I started doing is doing direct deposit, which a little tip that I want to give everybody that may have a Robinhood account. One thing I believe everybody should do is to go ahead and open a checking account with Robinhood. The reason I say that is it makes it much easier for you to move money in and out of the account consistently. It just makes it a lot easier with the checking account for me to do a direct deposit with my job, to just directly put the money. I don't even want to see it, so that like we talked about last week, I remove myself from the equation, so that money just automatically goes into this account. So every 2 weeks, about $40 is going to go into this account so that I can immediately just invest that money. Either invest it or just leave it there for it to grow a little bit and then use that money to buy individual stocks. One of the things that I'm thinking about doing a little bit more is if there's no stock that I'm necessarily passionate about buying at a point in time, I might start doing something where I just buy ETFs, where I just keep buying ETFs and building the ETF so that at least my money is going into something that is going to give me some kind of returns regularly. So that's something that I'm going to be doing. So I think everyone should open some kind of checking account. That's if your job offers like a direct deposit. Otherwise, you can do it another way where you just do a direct deposit every 2 weeks or something like that with your regular Robinhood account. But if your job pays you, whether it's once a month or every 2 weeks or on the 1st and the 15th, whatever it is, you can open a Robinhood checking account, and that way they'll send you a card, which the card is pretty cool. Actually, I can't show you guys that. The card is pretty cool. And it's a pretty cool card, but I never actually use the card because I just don't need to use the card. The card can sit at home because that's not the point of the account. The account is literally just so that I don't get in the way of the automated system of having my work literally transfer some of my paycheck right into this checking account so that I don't get in that flow. And every 2 weeks, I'm going to be depositing about $40. Every 2 weeks, $40 is just going to go into this account, which is about $80 a month. And that translates into a good amount of money every month that is being transferred into this. So if you do 80 times 12, what is that? 80 times 12 is 960. So $960, no, that's not right. 80 times 12. Man, that is sad. 12 times 8. Yeah, 960. What am I doing? 960, yes. I don't know what I was thinking. So $960 every month or every year will be deposited into this account that I will use to invest in one way or another. I'm also going to be doing that with my M1 Finance. With M1 Finance, they have something called the spend account, which they haven't sent me mine yet. But you can do basically the same thing. And it's basically just an easier way to transfer money in and out of the account easily, right? So it's just the easier way for me to be able to transfer money in and out of an account so I don't have to deal with all the minutia of actually like, hey, let me get my phone out, because right now we have free time for those who are working and working from home. Right now I'm at home, so I'm able to like look at these funds and look at all these things and look at it regularly. But once I start working, well, I'm still working regularly, but once I'm not, I don't have the same amount of free time as I do right now. It will be harder for me to like actually be paying attention intentively over all these things, which is another reason why I wanted to do some ETFs and those kind of things. But anyway, that was the Robinhood account, and the next thing I want to show is my M1 Finance account, which the update on it is that it's made money, because the last time that I had this account, I had put in $100, and that $100 lost $7 in like the span of a few days. But now it's at $107, which means, like we said just with the Robinhood one, the account is coming back up and the markets are coming back up. And one of the things that I did the $40 thing into this account as well. I transferred $40. So combined, I'm going to be investing about $160 every month into these two accounts. And I'll update y'all as to how the account is going. So if you want to make an account that looks similar to mine, or you want to do your own type of thing, you can do whatever you want. But I'm just going to be doing this because this is kind of a learning experience for me, and I want other people to kind of get something out of it. I'm going to try and learn from anybody who has any experience investing as well, and you guys can learn from some of the things that I'm learning as you go about this journey. So one of the moves that I'm making is I'm investing about $40 extra into my technology part of my pie in M1 Finance, and I'm putting an extra $40 in there into Microsoft, Apple, and IBM. And let me see, I can show y'all some of the activity, which is the upcoming trades that I'm making. And also I'm putting about $10 into real estate as well, and the good thing about M1 Finance that is really beautiful is the fact that M1 Finance actually allows you to do partial trades or buy partial stocks. That's one thing with Robinhood that I hate. Robinhood doesn't let you do partial stock investments, which would be so nice. They said they're rolling out that feature, but they haven't rolled it out yet, so that's unfortunate. I think I'm let me see. They had it somewhere on here where I was like, I'm number like 2 million and something to be able to get the benefits of fractional shares. Yeah, fractional shares, which I signed up for it, and I think everybody should sign up for it as soon as possible so that you can at least be able to automate your system to buy partial shares over time with some of the dividends that you earn. But anyway, I've been rambling for a minute about talking about these portfolios. Basically, nothing has really changed so far, but I'll be updating everybody as time progresses. The idea of these portfolios is to be focused more on dividend investment.